We'll get started. This is our fourth training that we've done in conjunction with Business Call to Action, Human Rights in Business 203, specifically looking at financial services. We've done previous trainings on our Human Rights 101 content, which if you have a chance, feel free to go look at it on the BCtA website, as well as deep dives into the food, bev, and ag sector and the consumer goods sector. And for this one, we'll be looking at the financial services sector and how businesses can respect human rights and think about inclusive business at the same time. The contents of this training include looking at a couple of key issues: discriminatory lending, privacy and data protection, customer due diligence, workplace discrimination, and women's economic empowerment. And for each of these issues, we will be taking a look at an overview and description of what the issue is and how it manifests within business, some cases and examples, and some anecdotal research on why this may be an issue, and then some guidance and suggestions for what business can do. To give you a little bit of background on who we are, my name is Michaela, and I'm a manager at BSR, specifically working in our human rights practice. My colleague Peter is a director in our human rights practice, and together we have a combined 10 years plus of experience working with companies on these issues and providing guidance on how best to respect human rights and implement the UN guiding principles. BSR is a global nonprofit business network. We work with lots of companies, predominantly large multinational companies, but also enterprises as well. And we work globally with through our 8 different offices. This gives us a perspective on all of the different issues that may appear regionally within businesses, operations, and supply chain. But also we try and take a systemic look at some of the challenges that face particular industries, including the financial services industry. We'll start with Business Call to Action on these particular trainings. And with their team, many of you may know Paula Peleas and Nazila and Yvonne, and with their team we have been working on this content to share with the BCtA members and any other interested companies or parties. If you aren't familiar, Business Call to Action is a global inclusive business platform. It's housed under the UN Development Program and receives funding from a number of other different governments. But with 200 member companies, a main area of their focus is small and medium-sized enterprises across the 67 countries where they have members. A big core pillar of the work that they do is looking at inclusive business and what it means for a business to be inclusive in the way that it develops products, or the way that it hires people, or how it operates its supply chain. BCtA defines inclusive business as a business that aligns business value with societal impact, and one that adheres to responsible environmental, social, and governance standards. We'll talk a little bit more about how this overlaps with human rights in a minute, but it's important to recognize that a lot of the companies, pretty much all of the companies that are members of Business Call to Action do have an inclusive business component in the way that they operate and the way that they think about their business model. And it's something that BCtA and BSR hopes to occur a little bit more broadly. At this point, we're going to jump into an overview of business and human rights, and I will pass it off to my colleague, Peter.
Okay, thank you very much, Michaela. And just a quick sound check. You can hear me okay here?
Yep, you're good to go.
All right, good. So I will let you drive these slides. Apologies, folks, for a couple technical difficulties here, but you'll be hearing me say next slide, please, quite a bit as we move through this. But go ahead and move on to the next slide, Michaela. So just a very quick overview here of business and human rights. And as Michaela mentioned, I would encourage folks to go back and listen to the Business and Human Rights 101 webinar that we did that's now posted up on the Business Call to Action website. We've got a couple of case studies here, or just pictures really, to try to bring out a couple of ideas around why business and human rights can be difficult, why it's not very straightforward always to understand what the human rights issues are for business. So on the next slide, you'll see a picture here of some workers who are being forcibly relocated from their land. This is definitely a human rights violation. As you can tell here, this is where the military is relocating them for a new business operation. On the next slide, then, you will see children harvesting cocoa before it becomes chocolate. This is also a human rights violation, but one where the remedy is not always as clear-cut as it may be to identify that there is a violation. We talked about this in a couple of our other webinars on focused on consumer goods issues where there's more of a child labor problem, and certainly in the food, bev, and agriculture industry, which was an earlier webinar we did. Also, a lot of child labor around the world in different parts of those supply chains, but the answer is not necessarily to just go in and remove everyone from the fields where they might be working. In some cases, children are grown up thinking about traditional agriculture or growing up in family practices, working on farms, and there might be okay for them to do a little bit of work, no hazardous work, but immediately removing them might exacerbate underlying problems around structural poverty or lack of access to education. And so even when you do find a human rights issue, or one that, as you're doing your due diligence in your company, it can be difficult to figure out exactly what to do. And so, again, we've pointed you to a lot of different web-based resources, free resources on how to navigate some of these issues, and would continue to encourage you to, to be very, very thoughtful about consulting external sources, but there are many, many out there now for free, so it doesn't necessarily have to be paid engagements. The next slide then is a little bit more tricky, right? Because here you see somebody, again, in the agriculture context, spraying a field and workers on a fishing boat in Thailand, where there's no obvious human rights violations, but there may be some human rights violations that we can't always see. In both of these cases, there's a pretty high risk that these are migrant workers who have been subject to human trafficking or to modern slavery conditions. They may have had their identity documents stolen, or they may not have been provided with the appropriate health and safety gear, all of which are going to affect their right to free movement around the world and their right to health and safety in the workplace. The reason that I'm bringing up all of these, or that we've put all of these different examples in financial services, you may be asking yourself, why is this related to banking? And the reason is because of financial services, they are in a very unique industry in a lot of different ways. But one of those ways is that through their lending practices, a lot of banks will be involved in or doing business with other businesses who are involved in a lot of different industries. The trick is that the bank or the finance institution behind those businesses, they're not usually causing these human rights issues. They're not usually on the ground in a position where they can investigate these human rights issues, and they're not usually in a position where they can provide some kind of a remedy to people who might be in harm's way. But the financial institutions are often obviously providing financing. They're lending to these companies. They're enabling them to exist. And so under the UN Guiding Principles on Business and Human Rights, there is some level of responsibility. It's not always clear what that level of responsibility is for banks, but there is some. And what we'll talk about as we get into this presentation is the obligation to do due diligence on your business partners and to try to understand where there might be risks throughout your value chain, which for financial institutions is often going to include your customers and clients. And so the key question is, how do you understand what they're doing and where they might have potential human rights risks in their operations? On the next slide, This is a slide we've been including in all of our presentations here. So, what exactly are human rights? Where do I find them? Is there a key document? There is a key document. We would point you back to the Universal Declaration of Human Rights. It's 70 years old this year, and it's the foundational document committed to by almost every country in the world at this point. And it lays out the 30 basic human rights that everyone is entitled to. This is everything from the right to life, the right to be free from torture, the right to free expression, the right to health and safety, good working conditions, a fair wage, and the right to organize a union. So those tend to be some of the ones that are most relevant for business, although a lot of other human rights are directed towards governments. So, creating a society where you have the access to justice, where you have a fair trial, where you're able to participate in the community. Those are not usually rights that are going to impact business, but rather are directed for governments. However, there are quite a few that impact on business. The reason businesses have, or part of the reason businesses have been focused so much on human rights is because on the next slide, in 2011, the United Nations adopted a pathway forward, a guidance document for business on how to understand and manage human rights throughout their operations, called the UN Guiding Principles on Business and Human Rights. And it lays out three parts. One reiterates this idea that the state has the primary duty to protect human rights, to establish laws and law enforcement institutions that protect their citizens' human rights. Lots of states do this to some degree. Some do it more than others. There's no state that is perfect on this. Every state is on a journey, so to speak, trying to implement their human rights obligations. And there's always a lot of different understanding around exactly what human rights are in a different country. So you have a right to free expression, but that free expression right is going to look very different if you are in China or Saudi Arabia or in the United States or Canada or Europe. And countries are, allowed to interpret rights to some extent to fit their culture and historical background and traditional ways of doing things. But ultimately, they do provide a baseline expectation for how all humans should be treated with a basic sense of dignity. The guiding principles focus on this second area, respect, where the corporate responsibility is not obviously to enact laws, not to protect human rights, but to respect the human rights of people who are impacted by its business. So that could be employees, could be contract workers, it could be community members, it could be customers, it could be anyone who's coming into the operations of the business where there is a risk that a human right might be infringed. There is also the obligation in the guiding principles to provide a remedy, which is the third part here, and that's both on states and companies to provide a remedy wherever an impact or a risk wherever an impact has occurred, and to mitigate a risk from becoming an impact through risk mitigation procedures. So what we'll focus on today is human rights issues that often arise in the financial services sector. And so, Michaela, I'll have you advance into that section. Great, and even on to the next slide after. Great. Discriminatory lending is the first one we're going to take a look at. This is obviously unique to the financial services sector, where the core business is often lending money in some capacity. I should also note this list is not intended to be exhaustive. There are some issues that we may not be able to cover or that may be unique to particular companies or unique to particular geographies. We just want to give you a flavor of what some of the issues are that you might want to investigate and think about if you're running a company that operates in the financial services industry. So discriminatory lending, this is basically the idea where either intentionally or more often unintentionally, banks and others are providing products that are sort of based in discriminatory practices. This is a human rights issue because Article 12 of the Declaration of Human Rights prohibits discrimination in all of its forms. And that's broadly, that's in the workplace, that's in interaction with customers, or in the financial services context here, in any products that you might be developing where there is some form of or potential for discriminatory lending. This could be, as the second bullet point here notes, intentionally denying access to capital to certain groups. This is a big problem around the world for denying access to banking for women. There, may also be, they may treat members of different groups differently. For example, here in the third bullet point, providing better pricing to one ethnic community over another, or they, in some of the worst cases, may actively prey on vulnerable or marginalized communities. This was a really big problem in the United States, in my country, certainly back in the 20s, 30s, 40s, 50s, up through the 60s until we got to the Civil Rights Movement, where banks were denying access to financing, access to credit to Black people and other minorities in the United States. And now we have seen, even in some banks in the United States, where there are products that they're creating that are significantly more disadvantageous and are marketed into communities that are heavily Black, Latino, or other minorities. So these practices really do still occur and are a form of discrimination and should be protected against. I'll have you go to the next slide, Michaela, just to give a couple of other examples and really focusing on lack of access to women, or lack of banking access to women and female entrepreneurs here. So the World Economic Forum recently found that 1% of countries have completely restrictive legislation on women. So women are not allowed to access financial services. But what's even more shocking is that in another 35% have what was identified as somewhat restrictive legislation in place. So this is legally barring women from accessing finance to capital. If you happen to be doing business in one of those countries, it can be difficult to follow the law and follow human rights principles, where you would be encouraged or you would be expected to provide capital to all potential customers, regardless of their gender or race or ethnic background. But in that particular case, you might want to consider whether or not it's worth doing business there. If you're not able to uphold those higher human rights principles, is that a place where you really want to be? Or is there a way that you can try to figure out how to work with others, or how to put pressure on the government? In some cases, I know that can be very difficult, but to try to change the law, or to try to make sure that the practices are a little bit more inclusive. A couple other examples here where female entrepreneurs, specifically in the second bullet point, have been found to opt out of formal credit granting processes, largely because they perceive that their application will be denied based on cultural stereotypes or traditional stereotypes against women. That is something that banks can proactively overcome, or at least try to overcome, through education, community education, financial inclusion, and business literacy programs specifically directed toward women or other vulnerable groups in the community, and really try to break down some of those cultural barriers and stereotypes against people who have historically been denied access to credit and other products. Good, Michaela. Let's go on to the next slide. I'll let folks take a look at some of these other examples. We've got sources in the bottom for each of them on their own. So, what can businesses do here? Let me start actually by pointing you to a resource you'll see on a number of these slides here on the bottom right. It's the middle bullet point called BSR's 10 Human Rights Priorities for the Financial Services Sector. It's a very accessible two-pager that we put together on the top 10 human rights issues for financial services companies. And it does go into a little bit more detail, and it's a little bit more expansive than we'll be able to get to on the webinar today, but that's a free resource that we've put out. There's also some good resources out from the European Commission, from other human rights organizations out there, and some that are focused specifically on women. The Global Best Practices in Banking, Women-Led SMEs, from Women's World Banking is a good one on there. the key questions that you can ask as you're doing some due diligence or trying to figure out if you might be involved in these kinds of practices are to go through and look at the actual products and look at the actual services that are being provided and ask whether individuals and groups are being treated the same. Are they offered the same rates? Are they marketed these products in the same? Are they engaged in the same way? And if not, then if they're treated differently, which in some cases is important and fine and completely legal to do, the trick is to make sure that they're not being treated different based on what are called immutable characteristics, based on their gender, based on their race, based on their ethnic or traditional background, or any of the other category of characteristics that people cannot choose themselves. Now, of course, there are going to be financial services products that are marketed toward a wealthier class, maybe toward an emerging class who's newly coming into the financial services market, like a group of college students. And there may be some products that are actually tailored to communities that are economically disadvantaged. But the trick there is just to make sure that they are not being marketed or delivered or developed in a way where there's discrimination that's occurring for people, again, based on gender, race, ethnicity, sexual orientation, religious background, those sorts of things. The second bullet point I think is also important. Does your company evaluate potential barriers to accessing credit or financial services by vulnerable or minority groups? So, asking banks to be proactive about this and actually find out whether or not there are some vulnerable communities where increased access to banking could be, could help. Does your company develop loan products designed to meet specific needs of particularly vulnerable groups? And then are there financial literacy trainings or other capacity building training programs that your organization could deliver to help break down some of these traditional cultural barriers? So a lot to do there. This is just the tip of the iceberg in terms of the due diligence and questions you could ask. Good, Michaela, we can move on to the next section. Very good. So data and privacy protection is something that's affecting, excuse me, all industries. Banking is primarily targeted, obviously, because of the access to people's bank accounts or potentially the other, the large amounts of money that banks are holding. And so they are what we would call an elevated group of companies when it comes to risk from data hackers trying to get into the businesses. A lot of companies already have really good data protection programs and security programs in place, or they have entire departments that are set up to protect their customers. But I want to point out two other areas here where privacy and data protection come into play, again, for banking, but also for other companies. And that is in the collection and use of data. We'll talk a little bit about that. And then also in the relationship with law enforcement agencies. On the collection and use of data, the key questions there are when a business collects data about a particular user, does that user know how their data is going to be used? Or does that customer know how their data is going to be used? And have they provided some form of consent to that use of data? It's a big question. It's something that we all can relate to for the most part. If you're doing any kind of providing of your data online, which obviously the majority of people are, and we often get these really long legalistic agreements that we're supposed to read or understand how our data is going to be used. Companies, I think, are right at the edge of trying to figure out how to reframe those to make them a little bit more accessible to the people who don't read those. Lawyers don't even read those things. We just kind of click through and don't really understand what we are clicking through. That's going to be important, again, for people providing sensitive information about their banking use and habits and needs and financial status. it's also then incumbent upon the bank to be very careful about how it uses that data. So it's one thing to just process it within the company, but a lot of companies end up selling the data to third parties or other people, oftentimes, without any harm intended. But as many of us may have seen with the recent Facebook issues, sometimes even though there's no harm intended in selling that data, you don't always know who you're selling it to. And so you got to be careful about understanding how they're going to use that data and how it could come back to hurt the customers. So that's something that there's due diligence that should be done there by all institutions. And then the final area to point out here is on law enforcement relationships. And this is where law enforcement may come to financial institutions. I think, again, a heightened category of companies that because they contain sensitive information, because they can track payments, they're obviously a target for law enforcement agencies to come and request data when they are conducting investigations about people who have potentially committed criminal wrongdoing. Now, that's oftentimes guided by local law, which can be sometimes okay in the United States, just to use an example from my country, although we've seen a lot of problems in this country where law enforcement agencies have overstepped their boundaries in terms of what they can legally require from companies. But it's also a problem in countries where there's less of a rule of law or where a lot of these procedures are not as well defined. So it's very important for companies working in those countries to have a strategy and a plan in place in terms of how much data they turn over when they are presented with the request from law enforcement. So just wanted to expand out a couple of other concepts here to make sure that we're not just thinking about this as a security or a hacker problem, but it's really around collection and use of data and then also on when that's provided to law enforcement agencies. Okay, Michaela, we can advance over to the next slide here. I want to make sure that we have enough time to get through everything here, so I'll leave some of these on our own. Just to note here on the second and third bullet points that hackers are designing more sophisticated ways to get into companies, oftentimes going through mobile phones or oftentimes targeting smaller and medium-sized enterprises where they understand that the protection might not be as good or there might not be an entire team of people who are dedicated to finding these or to preventing these attacks from occurring. Good, and we talked a little bit about the law enforcement requests at the bottom there. Yeah, thank you. So moving on to the different questions that your business can ask. What policies do you have in place around internet security and handling customer and employee information? What steps is your company taking to ensure customer and employee information is securely stored? Are employees and customers informed about data that may be being collected? Do you disclose data to third parties, or are you selling it to third parties? Do you have a channel for feedback in place for customers and employees to raise any concerns? Do you have a process in place to make sure that the company's information or that the customer's information is not compromised? And then, as I mentioned earlier, is there a program in place where you may be assessing the viability of your law enforcement request department to make sure that you're not complying with requests that are frivolous or maybe going to actually commit further human rights violations by a particular company? Okay, I'm going to pause here for just 5 or 6 seconds, see if we have any questions that may have come in. I saw we had a couple of other people that joined, and if not, that's fine. We'll keep working through a few issues, but let me just open up the floor here for any questions. Okay, very good. Michaela, why don't we continue moving forward? The next area here is one I previewed at the top around customer due diligence as being one of the most important areas for all banks to focus. And the trick here is that banks already are doing due diligence on their customers to some extent. They're asking about financial viability, they're looking at criminal backgrounds, they're looking at the potential financial risks of lending to a particular business or having a particular customer as a client. So this is a situation where we're not recommending that a bank would have to start from scratch or would have to build a new process where they're asking questions about their customers. All of those processes are usually in place. What we're asking banks to do, or what the guiding principles expect banks to do and other financial institutions, is to build a human rights lens onto those existing due diligence processes. So making sure to ask about a number of different potential human rights issues, or if you're working in a particular region, narrowing that list down to known regional risks around human rights, or if you're working in a particular industry, narrowing that list down to risks that might be in the particular industry. We went through a number of examples earlier on food, bev, and agriculture. If that's an industry that your company is lending into, it is important to focus on those issues and make sure that you are understanding what is happening there. Just to give one example, there was recently some press around a large Australian bank, ANZ, around a situation that they faced a number of years ago, about 3 or 4 years ago, where they were lending into Vietnam and providing some financing for I think it might have been a palm oil plantation potentially in Vietnam. But there were some issues around land grabbing and concession and illegal concessions from the government that had created that business in Vietnam. And I think that ANZ in that particular case had done some due diligence, and eventually did end up walking away from that deal. But not without some negative press and not without some connection to that particular issue. So it is really important, and it actually does come up where these issues are, eventually get connected back to the bank. The other big example here excuse me, is the Dakota Access Pipeline, which was a controversial pipeline in the United States. A number of banks had shareholder lawsuits filed against them, shareholder resolutions filed against them, saying that they were complicit in denying rights to indigenous peoples because of their financing of that particular pipeline. So again, making sure that the existing due diligence programs are enhanced with human rights, with these human rights issues, that's going to be a critical part of implementing the guiding principles. All right, I think we can go on to the next slide. And I've probably given all of my examples here. Yes, already talking about the ANZ banking group. Sorry, it was a sugar company in Vietnam. It was a Cambodian sugar company, but I think the actual plantation was in Vietnam. And then also giving the example here of a project, this one in particular in Honduras, where a number of the local indigenous communities were not provided with the opportunity to give free prior informed consent, which is a concept in some UN conventions directed towards indigenous peoples that allows them to provide consent before these big major infrastructure projects occur on their land. There were a number of different banks and other institutional investors that were implicated in that, and there were a lot of protesters that were, probably rightfully so, raising issues against these banks and causing a lot of reputational damage. All right, next slide, please. So here, in terms of what can be done, does your company have a due diligence process to identify and mitigate human rights risks? Does your company consider human rights throughout its customer due diligence process and in the Know Your Customer process? Does your company use leverage whenever available or wherever possible to mitigate or prevent negative human rights impacts? Does your company provide or participate a grievance mechanism where potentially, or where people who are potentially harmed by that particular project, could they actually call back to the bank or access somebody at the bank to say, hey, we want to talk about this and talk about your participation in it? Let me pause here for 1 second, talk a little bit more about leverage. This is a key issue for financial services companies because we often hear that and in reality, what is often the case is that one bank is usually one of many banks that are participating in providing financing to a project. And so they actually don't tend to have a lot of leverage. Maybe they're putting in 1%, 2% financing. But this is one where working collectively with the other banks in a way that does not violate antitrust rules, but is promoting the advancement of human rights and understanding of human rights issues, is to work with them to say, all right, look, we're all just a little piece of the pie here, but if we are all putting pressure on this particular project to either conduct appropriate due diligence, provide a remedy where something may have gone wrong, or just get a better understanding of what the risks are, we can require that if we're all using our voice collectively. So this is an area where we have seen collective action work better than just one or two banks trying to use what little leverage they have. Okay, let's shift into a couple different areas here, looking inside of the bank into workplace discrimination. So this is workplace discrimination. A lot of us are familiar with this. Again, prohibition on discrimination. This often arises in the form of, it can take a lot of different forms, either in, all the way from the hiring and recruiting process through the, the actual discrimination that may occur in the workplace. It can sometimes appear as harassment against people, unequal pay in the workplace, and then through to promotion and termination. And so a lot of companies have human resources departments that are looking out at this, or looking out for this particular issue. But as I think we have all learned from the Me Too movement over the last year, sometimes those procedures or grievance mechanisms or policies are not doing enough to help protect people in the workplace from discrimination. On the next slide, you will see that there is some evidence that this is even more widespread among banks. Certainly among large banks, there is a heavily male-dominated employee base in banks traditionally, and even though that is starting to change, it still is very much a male-dominated industry. A couple examples here from the bottom, or the bottom slide here, where large U.S. banks have faced rather large lawsuits against them, brought by people who have been discriminated against at the bank. These calling out J.P. Morgan, Wells Fargo, but many others as well, and lots of other companies. Obviously, this is not an issue that is unique to banks or financial institutions. Let's move on to the next slide here. I want to make sure that we get to some of our other issues. So workplace discrimination, what kinds of policies and practices do you have in place to avoid discrimination and to provide remedy for it? Do you provide professional development opportunities to all employees? And does your company ensure equal pay for equal work? So are women being paid the same amount as men? Are Black people paid the same amount as white people? Are other minorities paid the same amount as everybody else in the bank? That's what we're eventually trying to get to here. And then finally, does your company have a strategy around creating an inclusive and diverse workforce? So this is, again, an issue where there's a lot of good guidance coming out. BSR has a lot of guidance now that we're putting up on our website, but there's a lot of places you can look to understand what other banks are doing. I would point you to a couple of some of the bigger banks that have put out standalone reports on what they're doing to address human rights, and they've included these issues. So BNP Paribas, French bank, has put out some good reporting on this. Citibank is doing some good work on this, and ABN AMRO is a European bank that has put out a very detailed report detailing what they're doing on all these different issues, including workplace discrimination. Okay, Michaela, I think we can move on to the next slide here. So on women's economic empowerment, again, looking more here on the promotion of human rights, taking the opportunities that banks have to provide better access to financing for vulnerable populations, oftentimes women in many countries. Just a couple of statistics here, starting with the second one. Women's economic empowerment is widely recognized as being a critical driver of broader economic growth in a country and a precondition for alleviating poverty. If women participated in the economy equally to men, the world would see $28 trillion in growth by 2025. According to some studies, women reinvest upwards of 90% of their income into the health, nutrition, and education of their families, which is triple the value of men's investments. So a lot of good ripple effects sort of coming from bringing women into the into financial services products and into more inclusive banking opportunities. All right, next slide here. Great. So this is one I just wanted to be sure to call out some great work that MasterCard has been doing around financial and business literacy education, again, with the focus on providing access to finance, access to financial education to women in Bangladesh. This particular program has reached over 150,000 women over the last 5 years. Other banks and financial institutions are starting to do some similar work. MasterCard has also done really good work providing tailored products into refugee camps and making sure that other vulnerable people around the world do have access to financial products whatever their situation might be. So, and have done some really good reporting on this. It's all public, and would point you to their website to learn more about their programming there. We've got a couple of other examples here from India of programs focused on developing women entrepreneurs. We have a program called Her Finance. Her stands for Health Enables Returns, but we've got a number of different programs around Her Respect, Her Project in the workplace, and also Her Finance, where we've been working very closely with the Gates Foundation over the last few years to convert wage payments from cash to digital so that women become less vulnerable in terms of carrying around a lot of cash, but also where the payments can go directly to them or where they have more control over where those payments go after they receive them. We've learned, a lot of organizations have learned that cash payments are often subject to a lot of bribery and corruption and sort of skimming from the top before the worker actually receives the wage that they are entitled to. And so moving into a cashless payment system is definitely a recommendation. Michaela, I will ask you to go to the next slide and also just give you a heads up. I know we've got a couple examples here coming up on microfinance and microinsurance that you were putting together more recently, and so it'd be great if I could turn to you after this slide just to wrap us up, as well as bring a different voice into the conversation, which is always a good thing to do. So what can you do if you are a business here? As I mentioned, converting payroll from cash to digital supports financial inclusion for employees, especially female workers. Integrating financial education into new hire onboarding and employee training, that's certainly something that all companies can do, but it can start with banks, and it can start with other financial services providers who can develop a training program or who may already have some of that training material off the shelf and can tailor it or provide it to their businesses and say, hey, it's great doing business with you. We are an inclusive business. We support access to finance to all populations, including vulnerable populations. Here's a piece of training that we would like to give you as one of our customers. We encourage you to do this as you're onboarding new customers or working with new employees. So that's something that that all companies could do. Providing guidance on financial planning and budgeting, develop confidence building to enable women to take control over their finances, conduct awareness raising on the benefits of formal versus informal financial services, and developing relationships with local financial services providers so that there's a lot of capacity building at the local level. All right, again, a number of other issues that may come up around workplace issues or access to unions, but these are the ones we wanted to highlight that typically arise when we do our work with financial services companies. Let me turn it over to Michaela to just get us to the end here and talk about a couple of inclusive business case studies on microfinancing projects generally, and then some focused for women. Michaela, over to you. Thank you.
Great. Thanks, Peter. We just have a couple of examples here of inclusive businesses who help address some of the issues that we raised, some of the human rights issues that we raised. A number of these are business call to action members, but wanted to point out how companies are doing a good job of being inclusive in the products that they develop and in the customer base that they seek out. So in these first two examples here, we're looking at microfinance institutions and financial services providers, one in Zimbabwe named Thrive, and another named Contigo that is focused on work in Mexico. And both of these have a specific focus on women as their core customer base, both as those that they provide credit to, whether they're entrepreneurs starting their own business or need credit in some way, shape, or form, and then also providing training and empowerment curriculum to these women so that they can take their business and go to the next level, or think about ways that they can reinvest their profits into their communities. For Thrive, they also track changes in their customers' poverty livelihoods over time. And for Contigo, they often specifically look at providing loans for stable housing, which is a major challenge in a number of areas in Mexico. So in these cases, both businesses are inclusive in their practices and also helping to combat issues with discriminatory lending. So both in Zimbabwe and Mexico, women may be an underserved population in terms of financial services provided, and they may have limited access or may be concerned about reaching out for financial services if they fear they'll be discriminated against. And so these businesses kind of take an approach of specifically marketing and providing products for women. Another example is CLIS, which is a Filipino microinsurer. And this idea of microinsurance is really important in the context of people who need insurance, people who are often quite poor who need insurance against catastrophic events, whether they natural disasters like earthquakes, volcanic eruptions, monsoons, or even that may most poor are those who also need springs. It can be challenging for these people to access and find insurance. Now, it may not always be a case of discrimination if products aren't provided to those who are at highest risk of these catastrophic events. But CLIS does a great job of providing microinsurance to those who are most vulnerable and who may not be able to afford or access traditional types of insurance. This does a really good providing insurance to large swaths of the Filipino population, and they have goals to increase the number of Filipinos covered by their microinsurance programs to 8 million by 2020. And again, these are just a couple of examples that we've pulled up of businesses who have a more inclusive business model in place and who are able to expand access to financial services to those who may be vulnerable or disadvantaged populations. At this point, I think we'll open it up for a minute or two of any questions, if anyone has questions that they'd like to raise or comments they'd like to add. Okay, then I think at this point, we'd like to wrap up this training. We thank you all for participating in the masterclass today on financial services. And if you can, we'd really appreciate you filling out this feedback survey on SurveyMonkey. It's www.surveymonkey.com/r/BCTA-HR. Peter, I'll leave it open to you if you have any closing remarks.
Very good. Thanks for getting us through the end there, Michaela. Really appreciate folks for joining this morning, and for those listening via the webinar. Feel free to access the toolkit that is available on the Business Call to Action website, and feel free to reach out at any time to either Michaela or I at BSR if you have any follow-up questions. Thank you all for joining, and have a great day.